I'm Jessica Midden for IB Times TV with your midday market update. I'm joined again by Alan Valdez of DME Securities. So yesterday when I talked to you, we were going in ahead of Penney's earnings. We did get them today, and they came in better than expected. Now, you were just mentioning to me about the stock trading around $7. What happens if it hits that $5 level?
Good point. If it hits the $5 level, the funds, which have a $5 minimum, most of them, 90% of them, so if it breaks $5, not only can't they buy them, they'll have a fiduciary responsibility, they can't get into it, but they have to sell their stock. So here's the interesting thing. Normally, the stock's trading at about 736 in that range. If it breaks 7 and gets to 6 and change, the funds will start automatically selling because it'll start to perpetuate and feed on itself. They'll sell it down to 650, and if you have anything, you say, well, I have to get out now. Let me sell before it hits 5. Once it breaks 6, then chances are it'll sell down. But more importantly, it goes off the radar. The funds don't look at it anymore. They can't touch it. So it becomes a problem for JCP. No, just a small retail guy will buy and sell it. It's not good for JCP. So even though the numbers were good, the stock price still indicating it could be going down a little further.
Also today we did hear from Best Buy. Now we talked about them yesterday and about this phenomenon of showrooming where customers will maybe go into Best Buy, see what the price is for an item, then go on Amazon to see if it's cheaper, or another website like that, or eBay. Now, Best Buy's earnings did come in better than expected, but what do you think a company like that needs to do so they can still compete when you do have Amazon out there?
It's tough. I mean, if you look at, say, Books and Borders tried everything. They were in the books, obviously. They finally gave up. They couldn't compete with Amazon. Barnes & Noble still in most major cities, but they're having trouble too. They were trying to get by with the Nook, thinking they could do it. They can't compete with the Nook on Amazon either. So it's going to be interesting to see where Books and Barnes & Nobles go. As far as Best Buy's got the brick and mortar. They have the electric. They have the employees. More importantly, they pay a tax. If I buy something here in New York, if I buy a computer in New York, I'm paying a tax. If I go to Amazon, I'm not paying that tax. So people know this. Its delivery systems now are quick. They get it within a week probably, and that's a long term. They get it within 2 or 3 days. So I think you're going to see these constantly be under pressure. And again, it's not like you're buying a jacket or something. You don't have to try it on. You know already that you've read all the specs on whatever you're buying, whether it's a Mac, whether it's a whatever. And you know what you're going to buy, so it doesn't matter if you buy it at a brick and mortar or you buy on Amazon. The only thing that matters, it's cheaper probably at Amazon over the whole picture, the big picture, taxes and prices. So any kind of brick and mortar where you compete with Amazon, you're going to have a problem.
Finally, we did hear from Janet Yellen earlier this morning. Now, she was talking about the Fed maintaining on their current policy, but she did mention about the recent mixed data that we have been getting and whether or not, it's hard to tell whether it's all due to weather. What do you think about the weather? Do you think it really is what's putting a pressure on the mixed data we have been getting, or do you think it's also a sign that the economy isn't as strong as we might think it is?
You know, I think it's a little both, but I think it's more that the economy is not as strong as we think. Sure, the weather plays in, but you know, at the end of the day, if you need a car, you're going to go out and buy it, whether it's 20 degrees or whether it's 50 degrees, you're still going to go out. Maybe the housing market a little different, but overall, I think it's the general economy. You know, we still have that malaise here. I mean, they're saying unemployment's 6% or whatever, 6.7. The fact is, it's probably over 11%, maybe even higher. And if you look at earnings, if you look at revenue, the revenue isn't there. It's funny, you see they say, well, this company beat revenue. Instead of being down 20%, it's only down 10% in revenue. It's still down. Tell me when the revenue's missed on the upside. So we still have a problem with revenue. These companies do have great balance sheets, but that's because they're buying back their own stock, they're investing in technology, but they're not hiring anybody. And at the end of the day, it's that unemployment. We're in a country that's powered by consumer spending. If they're not working, they can't spend.